This is our Forex blog for January 17th, 2011. And as always, if you are buying the absolute strongest of all the currencies and you're selling the weakest ones, you're going to find that most of the time the trends are bigger. In other words, if you buy the absolute strongest currency, like for instance today from 3 to 8, the New Zealand, without a doubt, was the strongest of the currencies. The second one was the Australian, but the weekly and monthly trend, which are underneath it, is dark red, means that the longer term trend's down. So without a doubt, when you have real-time strength that matches a longer term trend, you want to trade the New Zealand here at 3. Whenever it hits the dotted white line, it's extreme strength likely to continue against one of the weaker pairs. Now, weekly and monthly trend of the dollar are down. However, it was relatively strong at that time. The only one that was really down, that didn't really have much of a weekly trend, the monthly trend was down, was the Swiss. Most people don't trade the New Zealand Swiss too often, but let's bring up this chart just to give you an idea. You want to buy the strong New Zealand versus the weak Swiss, and you're going to, most of the times, find continuation type trades. Watch this. You can either type the currency on the chart or just put it in here, New Zealand Swiss. And look what happened. The daily, weekly, monthly trend's up. 3 o'clock here. This one broke out and it went from 74.20 all the way up to 74.80. Nice 60 pips. And if you missed the first beginning of the move, which our software here showed it to you around 3, if you didn't get in right here at 74.18, you had about 20 minutes to buy this little flag breakout pattern here. And anytime you see plus 20 strength on our Trend Intensity Pro, those trends are very likely to continue with a few caveats. One is the daily, weekly, monthly trend up. I focus mostly on the middle one, which is the weekly. If the weekly trend's up and you have incredible strength like this, that trend's very likely to continue on a pullback. So you have a little pullback here. You might have went long around 74.40 or 35, and even if you got out right here, that's about a 15 pip move right to the upper containment band. And you can see it continued up another 30 pips. But the currency meter found this, and when the New Zealand was super strong and the Swiss was super weak, this is the kind of stuff that you get. Normally, you want to trade most of these pairs against either the dollar or the yen. Now, the dollar all of a sudden became pretty weak here at 4.30. So at 4.30, because the New Zealand was also strong, you could have also been looking to buy the New Zealand dollar. Let's bring that up. Here's 4.30. Notice again, pretty strong strength. It wasn't off the charts plus 20 here, but the price is above the hourly moving average. It's kind of going sideways. It broke out above this high here and pulled back. And this is a great trade to get in, somewhere around 76.94, and it went all the way up to around 77.50. It's about a 55 pip move, and it just continued and continued and continued, which is more often than not what happens when one currency is super strong, not only in real time, but also the longer term weekly, monthly trends in that favor, and the other one is super weak. When the differential between each currency's strength and weakness causes the currency trends. Now, on the flip side of that, notice today the Australian was pretty strong, but the weekly monthly trend was down. So was the New Zealand. So guess what? You never want to buy two green ones against each other, two strong ones, or sell two red ones against each other, because there's no differential in strength. If you brought this up, you can be pretty sure that the trend move is very mild, and it's very likely to be choppy. And guess what? Without even looking at a chart, I know that, because that's what our software does. If two currencies are strong, there's not much movement. You can see the high of this was around 76, the low was around 40. So it did move in a 35 pip range, but there was no continuation. Big move up, pullback, didn't continue. Goes up here, goes down, and goes up a little bit, doesn't really continue, doesn't make a lower low. Once the range is set, it doesn't really break out above the high or the low all day long. This would have been very hard for anybody to make money trading this pair, and our currency meter showed you that. Two strong ones. Now on the flip side of that, notice again the Swiss is pretty weak, and the Euro was pretty weak today. So the Euro Swiss would have also been one that nobody in their right mind would have been buying. Let's type that in here, EURCHF, hit enter. And again, this was a little bit better than the last one, but you know, it went down and made a low, came up a little bit, you saw the pullback, and then you notice also the weekly trends up, the monthly trends down. So you have a lot of mixed signals on this. When you sold here, it only pulled back about 15-20 pips installed. You sold here, you know, there was some opportunities for some small profits in this one, but you know, then it went up. If you sold here, the market continued up, and then if you look to buy a pullback here, it didn't continue. Obviously, it's underneath the hourly. Anytime you're underneath the hourly, it's more likely to go down. When it's above the hourly, it's more likely to go up. But compare this to the super strong trends today, like New Zealand dollar after 4 o'clock. Say after 4 o'clock right here, just, you know, nice 45 pip one-way move that continued, and that's what, you know, the software is designed to help you do, avoid unlikely trend moves. I'm going to quickly go through some of the other trades. Here we have a fib level. Once the fib level gets broken, it's a very big sign the market's likely to trend down. The downside of this is the weekly trends up and the monthly trends slightly up. So it doesn't mean you can't take the trade, but you're less likely to have a big move. You might have gone short right here, and it came down to the lower containment band, 50-day moving average, and you got out of the trade. Notice it pulled back up with less momentum on the way up than on the way down. It's always a decent sign. You go short again right here around 33.20, and you have your Fibonacci profit targets. As anytime those are underneath the white lower containment band, and especially the momentum isn't that weak, you know, the first sign of it reversing, you might be out of this trade at 60. You were short here at 16. You end up making 55 pips. And because the longer term trend's up, which you can see down here, you have a perfect 1, 2, 3 pattern here. You're looking for a reversal to bottom, pulls up, pulls down, doesn't pull back more than 50% of this move. That's my personal definition of a 1, 2, 3 pattern. Anytime it doesn't go down more than 62% of the up move, and most of the time no more than 50, it's likely to reverse. And usually you can look for buys at the lows when they're at or underneath the lower containment band if the longer term trend's up. So you have a great counter trend move right here, and it's likely to possibly stall here or here, and then you have the hourly and the fibs right here. Great place to get out. Now, like I said before, usually when it's underneath the hourly, you're mostly focusing on shorting. I don't think I would have sold right here because the longer term trend's up and because of that momentum, but there was, you know, it stopped right at the hourly, counter trend sell signal right there, and our fib level. And it also happened to be the whole half number right there. Notice this one again, daily, weekly, monthly trends up. This one's kind of chopping around. You might, because it's underneath the hourly, you might have gone short. Counter trend buy signal perfectly nailed the end of that move. And once you see a currency not making lower lows, if the longer term trends up and it breaks out over the high, you can go long right here. This is a likely profit target. This is the second one, and it went up without that much momentum, so I would have probably exited half here in the second half here. And the only reason to buy this pullback here, there wasn't a whole lot of momentum on the way up. The longer term trend is just off the charts strong, and you can buy it, you know, right here around 58.95. This is a profit target. A lot of times highs double top, and if it goes above there, you want to draw your fibs on this previous move, and you have a fib target, intraday fib target, that lines right up. This is a new feature of the software I just put in last week. This is a Fibonacci profit target drawn off of longer term charts. So a lot of longer term traders and some of the biggest traders in the world use Fibonacci profit targets and retracement levels. This is a Fibonacci profit target which perfectly nailed the high. Anytime you see a fib level outside of our normal containment bands, it's very likely to reverse. And if this weekly and monthly trend was down, you would have wanted to sell there. You probably wouldn't have sold there because of just the strength of the longer term trend. But this breakout trade right here was good. This trade was also good for about a 40 pip move in the direction of the longer term trend. Pretty much a no-brainer. This one's just chopping around. The longer term trend is down. If it had gone up to this fib level, you might have sold here. But because it's above the hourly, you're mostly looking for buys, and there really wasn't much momentum. Again, if you used our currency meter today, you really wouldn't have been focusing on the dollar Swiss. This one is extremely weak. And you can see it's underneath the hourly in contrast to the dollar Swiss, which was above the hourly most of the time. You might have gone short right here. This was a potential profit target, so was this. Notice the absolute abysmal lack of any kind of trend strength, which basically is telling you that at this time the dollar might be weak, but unfortunately the CAD is somewhat weak too. You know, you have two currencies that are both weak and you don't really have much continuation type trades. Here are the longer term trends up, and once it breaks above the hourly here, pretty decent trade. You might have bought here, got out of that trade, bought the pullback. Notice the momentum on the way up was less than the move down. You can use tick charts or 2-minute charts and scalp all day long using just the momentum of moves. And especially if it's above the hourly, it's more likely to go up. You get in. I probably would have got out of my entire trade here because there was decent momentum, but not off the charts momentum. And if you saw this little hour sideways consolidation, that's one of our systems too. You buy that breakout and it went right up to this level here where I would have got out. If the weekly monthly trend were down, you would have wanted to sell the fib level up here. But notice how well the fib levels worked, especially when they're outside of the containment bands. Just nailed the price, perfect profit target. And for those of you who are aggressive traders, you know, give it a shot on the short side. We already went over this one. New Zealand dollar, one of the strongest pairs. New Zealand was strong, dollar was weak after 4, and you got that nice explosive move. Euro yen, last night, Sunday, it broke down underneath the hourly moving average here, and it found the 50-day moving average. It also broke a fib level. Anytime fib levels get broken, it tends to be a sign of a continuation. So it's a very safe trade right here. The only downside is the weekly trend's up, so when it hit right here, you probably would have wanted to get out because there wasn't a whole lot of momentum. And then you may or may not have taken this trade. If I was up a decent amount on the day, I would have taken it. If I wasn't, if it was my first trade, I might not have taken this trade. But that being said, once it hits the lower containment band and goes sideways, no bounce at all. Because the longer term trend's up, you would expect that. You'd have to give this a shot right here, and then you can draw your fibs on this first wave and an idea where the market's going to reverse. Notice it went right down to our trading zone area. Because it's underneath the fib level, or I'm sorry, it's underneath the trading zones, way underneath it. Pretty decent place to look for a counter trend trade too when you want to exit your short from earlier. The longer term trend's up, so I wouldn't have bought the first time it touched. Usually I wait for a double bottom, especially double bottoms that have less than half of the weakness of before. Very safe trade. Here's the first resistance area, previous day's high. If it went through there, you would have looked to possibly get out here at the hourly. But what a great trade. You're in somewhere around 64, out at 11. It's about a 40 pip move. And you might have also bought this sideways move right here. This is kind of a 1, 2, 3 low, although it did technically move down more than 62% of the retracement. And most of the time when you're in a trade and it goes sideways like this, you just want to get out of the trade. It's not worth hanging on. Pound dollar, longer term trends down, but it's, or up I should say, but it's underneath the hourly. Anytime it hits the lower containment band without that much weakness, if the longer term trend's up, you might want to give it a shot. You can see that trade worked. You might have got into a trade here that lost, sideways mini multi-hour breakout. You might have got in right here and either got out of that with a break even or a small profit. This is a currency that you want to avoid because it's between two very close together fib areas. Once it finally breaks out of there, you might have got into a trade here, had a loss, got into a trade here, and you're only up a few pips. But again, there's no momentum in this. The longer term weekly trend's down, the monthly trend's just barely up. Best to avoid when, you know, trades like this. This one, longer term trend's up. It's right above the hourly. You might have bought this breakout right here. This was your likely profit target. It was only 10 pips away. And then because of the incredible momentum, you might have got into a trade right here. It's always risky to buy right in front of a major resistance area. You can see the fib levels have a very high percentage of time stopping price. So if you buy right in front of an area that usually causes price to stall, you know, you're going to probably have a higher percentage of losers than you would if they're much farther away from where you get in. This one, the weekly trend's down, the monthly trend's slightly up. When it went sideways here, multiple hours, broke down underneath the monthly pivot. Great trade because the next profit target level is all the way down here at 66. I would have probably got out of part of my trade there, and then on the little pullback here, move my stop. Draw your fibs. Anytime price breaks out through and below the lower containment band, usually it stalls at the first or second fib level. If it shoots through the first one, wait for the second one. If it shoots through that, any sign of it going up, get out. You might have been out of this trade here at 42. You got out of half of it here, but on the second half you made about 45 pips. Excellent trade. And this one, the longer term trend's up, so you might have bought this pullback here. Notice it hit a resistance area without that much momentum, and then you have a double top here with almost no strength at all. If the longer term trend was down, you would have wanted to go massively short right here. I might have sold this breakdown right here. This is the next profit target right here. It shot right through there and hit right here with decreasing momentum. I probably would have got out of the entire trade right there because the longer term trend was up. And then again, just like many other examples you saw today, it hit our fib level, found perfect support. You saw a lessening of the weakness. Pretty decent place to buy, especially when a fib level is underneath the lower containment band. And usually your profit target's hourly. But I would have got out when it went sideways like this for so long. But decent trade.